Every few months, we speak to someone who has been about to invest in property for years. And it's not because they're lazy and it's not because they're reckless, it's because they're careful. And sometimes that's exactly the problem. I'm currently in Mumbai speaking to some of our clients that we've got out here. And a lot of the time when we speak to them, they say, "Oh, I'm not interested in investing in UK property because I'm worried about the changes that have happened, tax, interest rates, new rules, new headlines, new things that they have to comply with tenants and the changing in the regulations. And at some point, it just feels easier to say, let's forget it, let's not do it. And especially for us, sometimes we think that when we're speaking to clients as well. But let's do something different. Let's actually think about the fundamentals. Let's take a step back and look at how property can perform over a long term. Imagine this. You buy a place for £240,000, well below the UK average purchase price. You put in £60,000 as a deposit and 75%, the rest you put in as a mortgage. The rent is about £1,200 a month. Now, that is an extremely low rent. That's well below the average rent for the UK market at the moment. And let's think about the fact that after mortgage and costs, you're making about 2.5% net per annum. And you can see why people start to think maybe this isn't a good investment. However, here's the real question. Why do we still feel like it's good? And why do people still build massive amounts of wealth through property? Well, the answer to the question isn't that we're looking at this as a short term. It's that this is a long-term investment plan. We're looking at investments for 10, 15, 20 years. If we look at that, if we look at below average rental growth, so 3%, again being pessimistic with numbers, then that £1,200 becomes almost £1,600 a month in 10 years' time. That takes your returns from 2.5% net per annum to 8% net per annum. But again, that's not the big picture. People aren't going to wait 10 years to get 8% net return. And so let's look at the property itself. Now, if that property only grows 3% per annum, which again is well below the average for the last 10 years and well below the forecast for some of the areas in the UK at the moment, your £240,000 property becomes £320,000. That means you've got an £80,000 increase. You've more than doubled your money in 10 years' time. You didn't invest 240 grand, you invested £60,000. And so if we add in the rents and we add in the growth, you're looking at a return of 150 to 200% on your capital in that 10-year time frame. And that equates to 15 to 20% net on the capital that you employ today. There aren't many stocks and shares investments or ISAs or trackers that with the same level of pessimistic numbers can get you those returns in 10 years' time. And so while everyone debates interest rates, headlines, numbers, changes in legislation, taxes, all the things that look negative, the very basic fundamentals still make sense. And this is the part that people miss. Property isn't necessarily exciting and it's rarely perfect and it's not necessarily always easy. We try to take a lot of that away from our clients to make it easier. But when you zoom out, it's steady, it's stable, it's long-term generational wealth that's being built for a lot of our clients. And we help clients all the time with this sort of reflection and looking at the longer picture or bigger picture for property, even just comparing it to other investments to see how it potentially works for you. So we'd love to get in touch with yourself if you come over to our website and download any of our e-guides and have a look at all the different resources that we have on there, or even call through on our main line and we can discuss if you've been thinking about it for a long time and haven't made that first step, potentially why now might be a good time. I look forward to speaking to you soon. Cheers.